All right, what's up, guys? So today we're going to be looking at ticker symbol NIO. That's NIO, the electric vehicle company. So I have the daily chart pulled up right now. Just wanted to show you what I'm looking at for it. It's approaching my buy zone right here. I have highlighted. Okay. Um, so right here, these red lines right here, this is what's known as a bearish channel. Okay, bearish meaning the stock is going down. Okay, as you can see, it's respecting this trend line at the top and it's respecting this trend line on the bottom here. This white line is directly the middle of this trend line, or I'm sorry, this channel. So currently we were trading on the lower half of this bearish channel. Now we're trading on the upper half, which is a good sign, but overall this is still bearish. The momentum is still down. We're still going down. So I'm not looking to get any long positions yet, but I am going to start looking to be accumulating somewhere here in this buy zone. First, we have to break this strong support level we have here. Okay. And as we can see, we also have a daily gap right here on the chart, and we also have a small daily gap right here on the chart. Daily gaps tend to fill about 90 to 95% of the time historically. And I have drawn up from each one of my four basically target entries for long-term positions. Now, when I say long-term, I'm thinking around like a year, typically, and I will buy some stocks and I'll buy some leaps. Okay, leaps are options contracts typically with like at least 6 months, but usually about a year out. Okay, so with that being said, if you buy from here on shares and it returns to all-time highs, it offers over 100%. From my first bearish price target up, that one offers 119%. From my second bearish price target is 134%, and my third bearish price target 150%. Okay, so this is the daily chart. We will go ahead and switch over to the let's see, let's do the 1 hour chart. I have some things I want to show you guys. So I just switched my drawings to my 1 hour drawing. Okay, and on the 1 hour chart, if you notice, we also have another bearish channel being respected right now with the white trend line being in the middle, except we are now trading on the bottom of this trend line. Okay, so what I would look for, the main reason I think NIO call options are going to be very profitable in the next couple of days. The reason why is because we have a bullish divergence. Okay, we have this we have our low right here, and then we have a lower low, and on the RSI we have here's our low, and we have a higher low. Okay, and this is on the 1 hour chart, so this is going to affect the stock in a short time period on in a few hours. Okay, in a matter of hours versus days on the daily chart. Okay, so the hourly chart obviously affects things hourly. So in the next 24 hours we may see some bullish activity on NIO. What I would do is I would look for some resistance right here. Okay, so you could draw some support levels, or you could draw this up on your thing, and if you're looking at it on the 1 hour chart, you could know that we have a resistance possibly right here. And if we start trading above this and flip it to support, then our next resistance would be here. And if we start opening and closing above this, then that would be considered a bullish breakout. And so we are breaking out of this bearish pattern and showing signs of bullishness and breaking out of it. So there's that. And then we also have the 4 hour chart. And let me pull up the 4 hour chart. I like to use a different study when I'm over on the 4 hour. I like to use this one here. Okay. So this right here is our 180-day simple moving average. If we look, okay, I also have another. If you go back as far as you can, 180 days, we're again in a bearish channel. Okay, it's purple here. We have the white line in the middle, and we are now currently been trying to use that as support. Okay, so we keep dipping below it. It wants to find support there. It's done it a couple times, but it keeps falling below. Now, last time it fell a little bit below, look at what it did. It rallied. It had a nice little rally. Okay. And if you see here, we also had bullish divergence. Okay, so this is a great example. Lower low, or here's our low, and then we have a lower low. RSI, we have here's our low, and then we have a higher low. Okay, so on the 4 hour time frame, we saw within the next like 10 candles, they were all green almost. Okay, so that meant the next 40 hours were all green. essentially. So that's how you can get an idea. So we're literally seeing this happen again, okay, with a form of bullish divergence. So I'm expecting this to happen, okay? If you notice, we bounce here once, we bounce here again. I'm expecting something like this to happen, okay? So the way you would play that, okay, me personally, what I do whenever I'm day trading is I go down to the 5-minute chart, okay, and I have a study that I like to use whenever I'm on the 5-minute chart. It's for scalping, okay, and I already drew my support and resistance levels. But basically what I do is I go and I take the pre-market highs and the pre-market lows and the market highs and market lows and just make those support and resistance levels. When you're scalping, these tend to be areas where you can take profit at or enter at. Because when you scalp options, the volatility is really affects it very much. So sometimes it's better to come up here, sell right here, let it come back down, re-enter, and then come sell up here or ride it up to here, sell, let it come back down, buy, and do it like that versus buy and then hold and then buy and hold and just hold through that. Because sometimes it'll the time decay or the implied volatility will eat away at your option contract. Okay. So specifically, the ones that I'm going to be looking at are something with October 8th, October 15th, or November 19th. November 19th would be more of a swing. It's still kind of risky, but you could swing this one a few days. I'd be comfortable swinging that and hopefully seeing some bullish activity in NIO over the next few days. So I like this one right here, the 40 strike between 85 and 88 is what it's currently at. And I like the 45 strike, and I also like the 50 strike. Okay. Um, we're going to be trading these. We don't plan to hold these to expiration. So all we need is bullish activity within the next few days and these to be green. Okay. So if you buy the 50 contract, we're not looking to hold this and have NIO at 50 over by November 19th. We're looking to just grab some option plays that have high open interest and a good amount of volume. That's what these two are. So open interest mean how many of these contracts there are to trade, and then volume is how many were traded. So I like these ones. And then you would get a decent percentage gain on these, okay? Or you could, and these would be less risky for a day trade. If something goes wrong, you might lose 20 to 30% and you might want to have a stop loss there. But the potential on these could be 20 to 50% in profits in my book tomorrow. So you can make 20 to 50% tomorrow. I personally am going to be looking at the October 8th. These ones right here, I like all of these. Okay, they have a good amount of open interest. If you look, this one was almost 3 times the amount of volume as the open interest. So 3 times it was traded, it was bought and sold almost 3 times as much as there are contracts, and all of these had more volume than open interest. So these are really liquid, these are really fluid. You could get in and out of these quickly tomorrow with no ease. But the thing is, these are super volatile due to expiration. So the theta on these is pretty big. If you look right here, the theta is -10, and these only cost about 35 or 36. So that's about a third. So basically, if your stock does not go up dramatically in one day, you automatically lose 30% off rip just from theta, not even from your delta loss or your vega or any of that. Okay. So that's something to keep in mind. These are going to be super volatile. You might buy these and then they go up 20% in 2 minutes and then they're down 30% 5 minutes later. So you have to have confidence in your play and trust your analysis, because when you are day trading close expiration things like this, you can lose your money really quickly, or this is how people get 200, 300, 400, 500% day trades in 5 minutes, 30 minutes, an hour. Okay. And I'll show you how. So basically, if we buy this one right here, okay, let's look at the current price. So if we bought 10 of these at 37, okay, boom, that would cost $376. Okay. So that would be our initial investment. For every dollar that NIO goes up, so if NIO goes up to $34, we will gain the delta on it is what we'll get. We'll get 26. So that right there is almost 100% of your initial 35. It's only $9 away. So if you put 350 in there and NIO is trading at 34, you're going to get $260. Okay. Extra because now NIO's at a higher strike price. So if NIO has an amazing day and let's say it goes up 5% or something like that, as you can see, like a red day of 5%, it was about $2. So let's say tomorrow it goes up 5%, $2. Well, that means that these strike prices, the delta on them, you would get that basically. So you would get $26 for every contract, for every 100 shares basically on this thing. So 26 bucks a contract. If you got 10 contracts, you get $260 every time NIO goes up $1 in stock price. So that's a really good return on your investment. If NIO goes up even more and it goes up to 37, you're gonna have 26 times 3. What's that? 18 carry the 1. I don't know. You guys know how to do math. We all have calculators. Basically, you're gonna be at like around 200 to 250, maybe 300% if NIO goes up $2-3. So do you want to hold that much? Like I said, these are extremely volatile. That's a best case scenario. I'd say is getting 200 to 300% tomorrow on NIO day trades. You can easily get 20% on these as long as you're, have a decent entry and NIO goes up. You'll easily get 20%. You can easily get 50%. You can easily get 100% scalping and day trading these close expiration contracts. But like I said, you have to be willing to lose whatever you put into it because these are extremely volatile. If NIO reverses and it has 30 minutes and it goes red, your contract is going to get destroyed and you're going to lose a lot of your money. So you need to have a stop loss, a trailing stop loss, or you need to have a support level that you plan to exit. So anyways, that's my view on NIO. I really like it a lot long term. Short term, I think it's bullish, but long term, with all this Chinese FUD going on, let me pull up my daily chart again with my daily price targets. This is where I'm more interested. So right now it looks good to me short term for a quick day trade, but long term, I'm not interested until we get inside my buy zone. So thank you guys for watching and let me know what you guys want to see next.